It's about that time of day again, folks. Welcome back. Welcome back. 7:30 a.m. Eastern Time, Monday through Friday. Welcome to our crude oil morning prep. My name is Joseph James. I'm a day trader over here at SchoolOfTrade.com. Come out and see me every morning, Monday through Friday. We run a live trade room. We also have a free trial right on our website. Check it out at SchoolOfTrade.com. And, of course, with me waiting in the wings here today, my better-looking half, Mr. Marty Errico. He's from TradersAudio.com. He runs a live broadcast every morning starting at 8:50 a.m. Him and his partner, Jeffrey, do a wonderful job every morning directly from the NYMEX exchange. A very powerful broadcast for us crude traders, so make sure you check them out, TradersAudio.com. Now, here's the plan today. I'm going to start with charts. I'm a technical analyst, which means I'm going to start looking at charts this morning. And then once I'm done with you, we're going to toss you all the way across the country to the NYMEX exchange, and we're going to listen in to see what Marty's looking at this morning. First of all here, hold on one second. Pardon me while the screens flicker. There we go. Gotta love these monitors these days. And of course, I'm going to start with a top-down approach today, which means I'm starting with a slower time frame first. I'll then move to overnight trading, see what happened overnight, specifically what happened coming out of London. And by doing that, I'm going to look at the last few weeks, the last few days, and then look at the last few hours. And of course, with that information, I'll build an opinion of what likely is going to be the direction today. If I can anticipate the direction this morning by looking for clues that happened in the past, I can dramatically improve my trading results because I can look for those high percentage opportunities this morning. And of course, this will be starting as early as 8 a.m. Eastern Time. So it's relatively simple. Look at the past, form an opinion of the future, and then we're going to look and see if these charts today are going to confirm my opinion. Now, of course, I'm just one man. I'm just one lonely old day trader with a bunch of charts, right? Some live news data. But I'm anxious to hear what Marty's got seeing, what he's hearing and seeing and feeling on the pit this morning. Don't forget, Marty's got his feet on the ground at the NYMEX exchange, a very powerful way to begin here. I'm going to start with charts. Marty's going to come in and confirm, deny, right? He'll come up with some of his own stuff too. Specifically, though, listen in, though, he'll be talking about market direction, intermarket divergence, market internals, option prices, and those pit session trading levels. Now, these are really important. There's two important things here. The pit session trading levels are different than the electronic trading hours. So my levels will be often different than Marty's, and you want to look and compare those two. When they both line up, you know you've got something special. Then don't forget also he'll be talking about intermarket divergence, and this is something that he does a very good job of in his broadcast during the day, keeping us updated on the multi-market divergences between crude oil, RBOB gasoline, heating oil, and Brent crude. So we got a lot of important information coming out of the pit here this morning, and we're excited to hear from Marty in just a few moments. Now, without any further delay here, let's move on over to our main monitor here, and let's get the day started. Now, the first thing we always do every morning is we begin the morning with a formal prep. A formal prep is intended to get our psychological, right, get our emotions under control, clear our minds to allow us to focus on what the charts are telling us this morning. You know, did you know that there's a lot of people out there that watch news before they get started on television, and boy, it gives them the bias throughout the entire day. We want to clear all that out. So the first thing we're going to do is go through a formal prep, kind of reprogram our emotions this morning, get back on track here, and get ready to execute a plan today. First things first, looking at the focus points here this morning, trading has remained a little bit extra cautious. It's been very surprising to see how extra kind of careful it feels like a lot of the traders this morning are walking on eggshells. But it definitely is true. We've got some very cautious trading here this morning. Markets appear to continue to be looking for clues from the Fed. We had gold rising overnight. Emerging markets continue to struggle. Weakness out of the emerging markets, all coming after this suspicion of the Fed tapering and then the kind of putting it on the back burner last week. We saw record-breaking highs in the German consumer confidence. In Europe, they continue to see consumer confidence rising, durable goods orders rising, retail sales rising. Europe is beginning to see the same kind of kickstart to their recovery that we saw 3 to 4 weeks ago. So very encouraging, the news we see coming out of Europe. Now, specifically looking at today here in the U.S., traders in the U.S. this morning are focused on two Red Star news events. We got durable goods and new home sales. Then, of course, we also have crude oil inventories, which, of course, is a Red Star news event for us crude traders. Just keep in mind those red star news events, durable goods, and new home sales, those are always going to give us a little bit more pep in the step of this price action. Remember, when we have red star news, more people participate. When more people participate, we get more volatility, more volume, more opportunities. So keep an eye on those two major, what we call red star news events, which we'll be talking about in just a few seconds. Last night, and of course we'll listen to more about this from Marty here, last night we saw Tuesday at 4:30 p.m., API inventories came out with a draw of right around 50,000 barrels. Very small draw. We'll let Marty talk more about that on his portion of the call today, but he will be talking about the inventory numbers we're looking at today at 10:30 Eastern Time. Just be aware, Tuesday evenings we get the API report, and that's what I'm referring to, not to be confused with the EIA report, which we'll get today at 10:30. Traders, of course, will continue this week, this morning, as well as the rest of the week, to look for signs the Fed will begin its QE tapering, right? Its quantitative easing tapering. Really important we understand the personality, kind of the global personality right now. There's a lot of people walking on eggshells right now, and that's what's causing this somewhat inconsistency in the personality throughout the morning. We're seeing a little bit of what yesterday felt a little bit like summertime trading, where we had some very good moments. We had some very slow moments as well, so we had to be able to pick up on those, step to the sidelines when things get a little bit sloppy. I don't think we're going to have the same problem today. We look at the news we have this morning, and we see right away we got some big, big important news here on the calendar. Again, 8:30 and 10 o'clock, durable goods followed by new home sales. They're both red star news events, which means they're both very important in our game plan today. We don't know what they're going to come out as. We really don't care what that news comes out as. All we need to know is that between 8:30, 10 o'clock, we're going to see some fireworks. And when those fireworks go off, we're going to trade in the direction of the long-term trend to capitalize on those opportunities. So we don't quite know what direction. We don't quite know exactly what will happen. But we do know that we're going to be focused 110% on the price action around those times this morning. And then, of course, to wrap up the morning session, we get 10:30 a.m. We've got the EIA, the Energy Institute of America, their petroleum, or the the Energy Institute Association, the petroleum status report we have at 10:30. Now, remember, this is crude oil inventories. The most important thing you want to remember about inventories is 10:15, I'm not trading, I'm sitting on hands. 10:15 to about 10:45. We may get a chance to trade a little bit before 10:45, but this is about average. One of the biggest mistakes that I continue to make in my own personal trading is I'm unable to resist the temptation to wait until just after 10:30 to get into that first trade after the news. It's really difficult because what's going to happen is there's multiple aspects of this crude oil report, right? There's going to be the inventory, and then there's also the demand number. Then you've got the previous adjustments, and then you've got that hidden information, which is what were the analysts really expecting and what didn't come into the news report. There's a lot of stuff going on at 10:30 when this inventory number comes out. It's very wise to sit back, relax, wait for that first, which is usually the incorrect direction, wait for that first breakout, and then wait for it to reverse. Usually you're going to have to wait there 10 to 15 minutes after that inventory number gets released. Okay, so be careful. Watch that time, 10:15 to 10:45. I'm not trading crude this morning. I will wait patiently to find that new trend develop shortly after 10:45, and then I'm trading in the direction of that trend. Let's keep moving. Now that we know what the news looks like today, I'm going to set my alarm clock to make sure I know when the news is. I really don't care too much about what the news is telling me. All I focus on is when is that news report, right, scheduled to come out. Looking good. Looking good. Let's keep going. All right, we got charts up here now. All the analysis here is on your screen here already, but let's grab some real-time charts here. First things first, I'm going to start out this morning with a 30-minute chart. The 30-minute chart's giving us a lot of big clues here this morning. First things first, we see that previous high of day is just lingering right here this morning. The previous high of day is a really big clue. Now, before I go into what this tells me, let's think about what's happened over the past few days. Lower, lower, lower. Clearly the trend is, yes, lower. That's pretty easy to see. Now what I want you to really focus in on though is look what happened yesterday afternoon. We made a new lower low. We break below the previous day's lows. But look where we closed. We closed the day up near the highs, right? We closed the day in the upper third of the range. Now that tells me the strength is there. Now that I know the strength is there, right, basically this tells me there has been a fundamental change in the direction, in the market's personality, in what the market participants deem valuable. And so now all we have to do is we're suspicious there's a reversal coming, right? Because again, we got right back below the previous day's lows. We closed the day near the high of the day, right, upper third. Now all we have to do is wait patiently to see, are we going to confirm this opinion? My opinion is that the sellers failed, the buyers grabbed hold of it, and they're potentially going to bring this thing higher. Now what I need to do is I'm going to wait for the opening bell at 9 o'clock, and if we have a print above that previous high of day, 103.64, you know that tells us the sellers have been brushed off, the buyers have taken back control, and we should be looking to go higher this morning. Where are my targets going to be? Targets will be nice and easy. Previous high of day, 105.12. Previous high of day, 106.11. This chart is a 30-minute chart, and this chart is used to tell me the major trading ranges. See how easy it is to be able to see that price went below and then came back up? Now, if I open above those highs, if we open up top here, that tells me the bias has changed. Yes, this is a chart of crude oil, 30-minute chart. Great to have you here, Andy. Thanks for being here. Let's keep moving. Now that I have my 30-minute chart done, let's keep moving on down here. I got a little bit slower time frame here for us. There we go. Let's move to our anchor charts. Now we begin to put together more clues. Here's another chart of crude oil. This is another slower time frame chart. And the most important thing we see on this chart is look what's happened. First of all, again, last 3 days, 1, 2, 3. We can easily see we're moving lower. But wait just a second. What do you see here? Support holds at the lows of the channel. More importantly, look closely. We've broken above the resistance cloud. Now, for all my students out there that are with me every day in the trade room, when we get above that cloud, now that was resistance. That resistance now has been broken. And when that resistance is broken, now we have potential, right, for the reversal. We see we have a couple big fat green candlesticks in there. We also have some big wicks in there, so you can see we're definitely struggling to move higher. But clearly here, we have potential for reversal. So both the 30-minute chart and the 5400 tick are all giving me signs we should be looking to buy. Let's keep going. What else do I see here? Let's move a little bit faster now to an 1800 tick. Move down, and now, here we go. Now we've got some clues we can use. So we're suspicious here, right? Our opinion is that we're going to be looking to buy today. Now we need to confirm that opinion. What do we see here? A little bit faster time frame, same crude oil market. Now what do you see? I see that trend has already changed. Remember how we were saying we were looking for a trend change on that 5400? Now, slightly faster time frame, that trend has already changed. And with that trend changing, now we're free to go looking for those opportunities to buy. So what are we going to do with this then? Well, now that we know that we can indeed start looking to buy, now it's as simple as finding the next entry pattern. Remember, all we have to do as traders is find the direction, which we've determined is long, and then look for entry patterns that go in that direction. So I'm going to find my entry pattern, either double bottom, wave pattern. Okay, so whatever pattern I choose to use, I will find those patterns now, and I'll trade in the direction of this new trend. Now, before I take those trades, I should probably know where I'm going to be getting out of that position. Every pattern has its own particular trade management. So when I find a wave pattern, the wave pattern will tell me exactly where my stop loss goes, and then I'm going to use these levels overhead for my profit targets. It's really quite simple. The long-term trend tells me what direction to trade in because the trend is my friend. I then now look for entry patterns in that direction. We teach all of our students 3 different entry patterns. They're very simple, and each entry pattern tells me exactly where to place my stop, and then I use my anchor chart levels for my profit targets. 104.53, 105.23, 105.92, and for all you home run hitters out there, 106.90 if we got any position traders out there that want to hold this baby here for the long term. I'll be looking at 104.53 for my initial profit target this morning, and we should be able to get that thing because we got some, again, some Red Star news events here this morning that should get us moving pretty darn well. One step faster here before we turn over to Marty here, and here we go. I've got my final now anchor / entry chart. This is going to be one of those hybrid charts. Another crude oil chart here, this time a 600 tick, and we're moving faster. You can see we have a bullish channel. As we start to go into the entry patterns now, we start to see, perfect, we're getting easy clues here now to continue to confirm we want to buy. See that 103.49? That's going to be the easiest place right there. That's my spot to buy here. I'm looking for price to come down, test the 103.49 area, and I'm looking to buy. That will be the ideal location to buy right now. If we do get a new higher high, I will adjust that, and we'll continue to look to buy the lows of this bullish channel because that's where the high percentage trades are going to come. Buy those lows on the way higher. Don't forget to use those levels overhead, 104.53, 105.23. These levels are on the blog already, so you've got those right in front of you. I'm ready to pull the trigger here this morning to get buying. I've got a plan of attack in front of me. I'm opening up my trade room in just about 15 minutes time with the rest of our students at School of Trade. Before I get started, though, I can't wait to hear what Marty's seeing out there. Marty's going to talk a little bit about the inventory numbers today, and most importantly, we're going to put our finger on the pulse of what's happening on the floor. Thanks for joining us, Marty. Thanks for being here. How are we doing this morning?
Great. Excellent, JJ. All right, guys. Good morning to you all. All right, so let's first and foremost talk about inventory numbers from last night. The reason why we are kind of trending a little bit higher this morning was due to the fact that we had inventory numbers that showed us a little bit of a bullish draw. Secondly, I want to also talk about the fact that we stayed up above 102 even. Now remember, initially, all the paper, right, when we were watching the paper come in a few weeks ago, and they established these net long positions and these record net long positions, right, it was all initially at the 102. This is where all the longs came into the market, and now we're starting to see this kind of hold, right? So that's very important. So we'll show some charts in a minute. Let me just show you guys the numbers from last night. We're talking about the American Petroleum Institution, kind of our sneak peek preview to the API, to the DOE EIA numbers that are going to be released at 10:30. First, let's talk about the fact that we saw a little bit of a light draw, right, in inventories. Crude draw of about 54,000 barrels, right? That's a little bullish. Cushing, though, shows a draw of about 400,000 barrels, almost 395,000. So that's also bullish. We have builds, minor builds in the gasoline and distillate number. That's using our multiple market divergence, giving us just a tiny draw. So that's still a little bullish. Mixed, kind of mixed report across the board, but draws across the board and for the crude, and we're looking a little bullish, right? These are going to be your forecast for today's number. We're looking for at least 1.1 million in the crude. Anything below that, we'll be looking to buy even more, right? Anything above it, we'll be looking to sell if it comes in line with expectations. We're neutral, still bullish. Gasoline, we're looking for a draw of about 539,000 barrels. Distillates, we're looking for a minor build of 143,000 barrels. The refinery utilization rate, very important number. We're looking for negative 0.40, and we're looking for that refinery utilization rate to come in around 92.1. And again, we're going to be watching those Cushing numbers very closely this morning, as that's going to be another huge variable. I couldn't agree with JJ even more about trading at about 10:45 to almost even 11 o'clock. Hold your guns. You know, there's no need to trade that reaction and get caught up in the chop. So I agree with him in terms of just waiting. That's what most locals do in the pit. They either position themselves beforehand or they'll wait till after that news comes out. So, okay, we determined that the paper has been a little long-sided here, right? And besides the fact that paper has been long-sided, they've been long since the 102, and you can see they did not get out yesterday. If we saw volume with conviction below 102 half, 102 even, that would tell us that they're getting out. But in terms of that, they're kind of staying put. You can see on the longer time frame, right, we have a very high percentage trade setting up right here as soon as we get above actually yesterday's high day, which we are above, right? So we're going to be looking for a breakout up to 102, 105.12 and that 106.11, and even the higher end of the wedge, as JJ was mentioning, around that 106 to 107 level up here, right? So that's going to be our last and final profit target, but most likely we're at least going to see 102 and also that 105.12, excuse me. So that's exactly what we've been looking for here, guys, in terms of just crude. Now let's also just talk about the multiple market divergence, right? So we've been seeing RBOB higher this morning, trading at about 267.20, right? This is our leading indication on the crude, along with the heating oil, trading around 299.30 this morning. They're both significantly higher, just like the crude, so we could see, again, that breakout to the upside, and that's what most traders are looking at in terms of the big paper here in the pit, moving prices to the upside. So initially, off the bell, we're looking for that print above those 103.65, and if we get it, then we can probably watch initial buying coming in. Remember, we have 8:30 numbers coming out this morning, so that's going to be significant in terms of just whether we get that huge buying and that conviction, that follow-through, or we end up backing off just a bit. So also I want to mention the spreads this morning, right? Spreads have been starting to tighten up. The Brent WTI spread telling us that we have a little bit of a bullish trend, right? Counter spreads, front month Novi right now, we're about 60 cents, right? Looking very bullish, and also our front month Novi Jan at about $1.52, and that's also bullish. So again, a lot of bullish variables in this market this morning that we're looking at, and we're going to look to try to continue with this trend, right? As I mentioned, also those RBOB and heating oil crack spreads also looking bullish. So again, we have a lot of variables this morning that are kind of influencing the market to trade higher. Real quickly, let's look at this natural gas here. Natural gas now, we're talking about Novi. Remember, we have an options expiration number today in the natural gas for the October contract, and then tomorrow will be outright expiring. So there's going to be increased volatility in these markets, and that's going to give us really, really, really great trading opportunities today into tomorrow. So again, high volatility in these markets, and you can see we find yourself at the bottom of this, oops, excuse me. We find ourselves at the bottom of the bullish channel, and what do we do with the lows? We try to buy the lows. So again, we're going to be waiting for basically a two-step long above the 359 halves. You know, that's fair to say, 359 half, 360 even, right? 360 even, right? We're going to come in and buy those lows and try to get up to at least 370 even. That's going to be my potential profit target that I'm looking for, right? So again, that's going to be the deal for the natural gas. Looking to buy above 360, trying to buy those lows. Simply put it, very simple, guys, again, and we'll be covering that much on the broadcast. Let's take a look at some levels here, guys, right? We're going to take a look at some levels here from the 25th. Another thing I want to mention real quick before we take a look at the levels, volatility has just been sitting there at 22%. I mean, we were looking to sell volatility, and we had a very successful opportunity to sell volatility this whole week, but still, implied volatility sits at about 22%, and that's why we only had about a 92-cent range yesterday and very minor opportunities to trade because of this volatility coming in and just holding 22%. Let's get to these levels here, guys. Let's look at yesterday's pit session levels. We had a high up at 103.22, which we are well above this morning, which is bullish, right? Your low from yesterday, 102.30, which held, as we talked about, that 102 level holding. Close and settlement number from yesterday, 103.11, which was back up near those high prints JJ mentioned. Let's talk about the daily pivot today, 102.88, which we are above, so we're going to be looking to buy pullbacks here. We got some resistance up above at 103.46, which we are above, 103.80, 104.72, and most importantly, that last target that we mentioned of 105.12, excuse me, right? Support down below, 102.54, 101.96, and also 101.04. Right? Open interest this morning here has been kind of falling just a bit, which has been squeezing out most of those shorts now. 366,735. We'll get some fresh numbers on the open for that open interest. And as I mentioned, volatility here holding steady at 22% on the implied vol. Front vol index in the OVX also trade around 22.25. So again, you can see volatility kind of holding steady and firm. So that should give us a decent trading range today and very good opportunity to look for some very nice conviction here in the market. Big major strikes in the pit that were traded yesterday. We saw a lot of call buying here down at these lows. 102 evens, 102 halves, 103 evens, all bought up on the call side over 5,000 lots of each call. Again, they target basically 105s and 106s in those options for the short-term daily and weeklies. So once again, we still see that kind of conviction to the upside there coming off these lows in terms of just what they've been doing in the pit, in the options pit. Outrights, they're still long, as I mentioned, the paper has still been long, with locals now coming in to try to scalp this as well, right? Let's talk real quickly here about natural gas, the pit session levels from yesterday. And again, now we are introducing, guys, the November contract into trade here, guys. So again, Novi front month now in that natty gas. Let's talk real quickly here about your levels. High yesterday, 364.80. Again, we're looking to buy above 360, guys, try to get some longs in this market. If we don't hit the 360s, then I guess we'll just probably trade sideways. But still, regardless, we're looking for some upside. Remember, the reason why natural gas has been falling over the last couple of days has been due to weather, right? Weather has been kind of driving this market a little bit lower. So that's been our only and main variable that we've been really kind of keeping an eye on, weather, and then inventories tomorrow, of course. So as we spoke out here, guys, again, your pit session high from yesterday, 364.80. Your low, 355.20. Closing settlement number, 355.90. Ladies and gentlemen, your daily pivot today is going to be at 358.60, which we are trading well above this morning with here, guys, your first profit target at 362 even. 368.20 and 377.80 support down below, 352.40, 349 even, and 339.40. Again, implied volatility around 30% this morning, right across the board. We've been watching open interest kind of just rising just a bit, almost up to 300,000 now this morning. Again, we'll get those fresh numbers on the open. And most importantly here, guys, again, those strike levels as they buy the 360 and the 365 call, that's going to influence your prices to trade a little bit higher. So again, we've been seeing a lot of activity here, 360, 365 calls as they buy those calls in the pit. So again, those are going to be here, guys, your levels for today and the crude in for the natural gas for today, the 25th. And I just want to remind you about those numbers here that we had last night into this morning, right, those API numbers. This is going to be your sneak peek preview of today's numbers, so this is why we are rising in near term right now. Remember, ladies and gentlemen, these are going to be your preliminary numbers out of Platts for your expectations and forecasts shown right here. I'm going to circle this right here, right? This is going to be your preliminary numbers. They may change, but most likely these are going to be the forecasts that we're going to be watching for. And again, anything above these numbers we'll be selling, anything below it we'll be buying. And if it comes in line with expectations, we'll still basically be buying it because of the fact that these are nice draws in the market. This is the reason here, guys, why we are looking out for these numbers and getting that good influence from the API this morning. So, alrighty, guys, 8 a.m. I got to open things on up in just a little bit here, so I'm going to take off again on the trading floor, and we are going to rock and roll here today on a Wednesday. Again, got inventories here, got a lot of news at 8:30, 10 o'clock, and also 10:30, along with some Fed members speaking today as well, and some bill auctions. So that's about it, guys. I'm going to throw it back over to Los Angeles, and we're going to go talk to JJ.
Thank you, my friend.
I set up here, guys, down on the trading floor.
Boy, hasn't it been, I don't know if you guys have been listening to those Fed speakers this week, but it's been almost like a talk show this week with the Fed speakers just tearing into the Fed. I was listening to Richard Fisher on Monday afternoon, and I'll tell you, some of these Fed speakers are really entertaining. They're more entertaining than the guys you see on CNBC because they don't hold back. So definitely a very exciting time to be a trader. Guys, thanks so much for coming in and joining us today. Marty, thank you as always for such great analysis. And don't forget, guys, come out and see us tomorrow. Every morning at 7:30 a.m. Eastern Time, Monday through Friday. I'd love to give you an invitation to come out and see us. I'd love to get your feedback on what you guys would like to see more of or possibly less of each morning. So don't forget to send us an email. Give us your feedback. Do you want to come join us tomorrow for a live broadcast where you can ask questions in real time? Shoot us an email. I'm JJ at School of Trade. That was Marty at Traders Audio. And don't forget, I'd also love to get your feedback on whatever you love, what do you hate, what do you want to see more of, and what would you rather skip each morning. Thanks so much for the feedback. Thanks for being here today, guys. Don't forget, we got a bullish sentiment in front of us. We're looking for entry patterns to get long right now. We've got 8:30 news just before the opening bell at 9 o'clock on crude. And don't forget about that 10:30 inventory report that Marty was kind enough to go over with us for us today in great detail. You got to learn this stuff so you can earn with this stuff. Log in to see Marty at tradersaudio.com. Check out our free trial at schooloftrade.com, and we'll see you guys in the trade room and on the broadcast. Have a great day, everybody. We'll see you guys tomorrow morning. Got a 23-hour and 30-minute break. We'll see you Thursday morning, 7:30 a.m. Have a great day out there. Adios, amigos. Bye-bye for now.